Good afternoon. This is Anka Metcalf with TradeOutloud.com. Welcome to the weekly wrap-up for the week ending today, May 12th. It is Friday. It is 11:52 a.m. and we're going to start by taking a look at the market's price action at the indices, gold and oil. We're also going to take a look at bonds and look at current price action, and also we're going to take a look and see what's in store for next week. First off, we're going to start with YM E-mini, and we can see that yesterday we've reached into the 20,760. We did have a trade short, however, we didn't have the follow through needed to continue lower. We did stop into this area. We breached a little bit the support level at 769, at 770 here. We traded 10 points lower and then the price came back up. So extreme bullishness. We bounced off an area of support. We have two moving averages at this point. We have the 20 and the 50, and we also have a price cluster at the same location, although the price cluster support area is at 20,700, where our ultimate target was for the day yesterday. However, we didn't have follow through. So once again, there has been buying activity off this support level. Today we were trading within an inside range. As I mentioned in this morning's video, if we trade above 20,900, we will look for a continuation higher back into the 21,000 level. And if we break this level of support here at 20,763.60 area, then we can look for a more of a bearish bias. When we look at the week at the hourly chart, and I'm going to zoom it out a little bit here, you can see that since we have created this high, and this was on Monday in the overnight session, and this was following France's election, you can see that the price has not visited the 21,000 level, but it pulled back and it bounced weaker, establishing a lower high compared to the prior high. It fell, and when it bounced back, again, a lower high, fell again, lower high again. So it is in the battleground right here. And we're seeing some kind of symmetry. We're seeing symmetry of what is happening. You can see the consolidation here after the pop higher, and then a little bit of burst to the upside, and then the price gets rejected again, lower high, from a lower high back down. You could see here the tug of war. We also had a push to the upside, and again, base pulling lower. So you can see that we have symmetry in going lower. We have one larger down move, the second larger down move that happened yesterday with a very violent bounce off a daily support level. And here's the line in the sand. And here is where we need to look at the daily chart for guidance. So obviously, if we trade above this area, this whole congestion area, 20,900, yes, we will continue higher. As long as we maintain the prior day's parameters, and this was the case yesterday. When we opened yesterday, we were still trading within the prior day's range, and that makes it a very difficult environment. Every time when the price is captive within the prior day's range, that's the first clue of a very choppy trading session. The clear and the follow through comes exactly when we break above either the highs or the lows. So yesterday was a little bit of breath of fresh air because we had a little continuation to the downside. We took out the prior bars low, and we also took out this prior support area, but then quickly again we bounced higher towards the end of the session. You could see here we had a flurry, one bar to the downside, and then you can see that buying is taking, buyers are taking their time to push the price a little bit higher. So all in all, for next week, we're going to look for a break of 900. 900 is going to be that line in the sand that is going to determine whether we remain bearish, neutral, or bullish, because if we're trading above, obviously we're going to become bullish. If we trade below today's cluster, 823, actually we did have a target into the 825 level today, and you can see here how the price had a very hard time. Actually, you can see the spike to the upside was nothing else than all the morning traders getting stopped out. This flurry to the upside were the orders that were in for the stops. And you can see what happened. So flurry to the upside. And then that's the reason why we have calculated risk, because we need to limit our losses and find better timing with the market. So right now we're reversing. So it's back to the downside. Once again, we have had a very difficult trading environment here. It was very hard. So for the month of March was extremely difficult month, where we have been ranging. April as well, a little bit of follow through. And then we've had these election gap ups that happened only in the London session. So only in the European session. So pretty much we've been pretty much sideways throughout the New York sessions. And then again, we're having the same cluster here. We're not breaking out, we're not breaking below, so we're still in this range. All in all, 750, 21,000 is the bigger range without a conducive directional bias. So we don't have a directional bias. Obviously, from the daily chart, we are strong. And this is a pullback, and if this pullback holds at 750, and if we break above, first off the clue, which is 900 and then 21,000, we will continue higher. We're trading in an overextended market. As you can see here, the price is very much extended from any kind of support level, so it's hanging into thin air. Also, you can see that this month's trading, take a look on the monthly chart here. You can see the monthly chart. We trigger slightly above the prior bar's high. See how extended we are on the monthly chart as well. But yet we're consolidating bullishly. 20,280 is the support level, and the resistance level is 21,162. If we break above these highs of 21,000, we can see another leg up. However, keep in mind, look at this price action here. Very small price action for the first 2 weeks of trading in May. Very, very slow price action. You can see by the size of this bar. This is literally this month's trading, this month's range from 20,770 all the way to 21,000, which we had here, 21,162. So it's a very tight range for the month. As long as we maintain these support levels, yes, obviously we're going to be looking bullish, but at the same time, look at the hourly chart for guidance, because the hourly chart is going to give us guidance throughout, and you can see the falling tops, you can see the falling bottoms. So definitely we do have a wave of weakening in the market, and we've seen this wave come in this week. Also, let's move on to NQ. NQ has been very strong. One of the reasons why we have been very strong in mini Nasdaq is that we've had a lot of earnings that came out this week, a lot of powerful earnings. A stock like Nvidia, which is a real mover for Nasdaq, it's a market stock, has influenced the price action of Nasdaq, obviously, of this mini Nasdaq. So what we see here on the daily chart is that we had triggered a daily buy today. What that means is that we literally are trading above this prior high over here at 74. Today we did have a shallow pullback, not conducive to a good risk to reward trade, because we have an ultimate high of 87 right here, 56.87, and we had a 10-point stop. And well, I was looking at it earlier, it was even a 12-point stop. So the range was very large compared to the possible reward that we can have with this trade. So therefore, sitting on our hands and not seeing a good risk to reward ratio is going to keep us out of trouble. So we did still have room to continue higher into the 56.87 area. Obviously, there is a lot of room to continue into the 5,700 and into the 5,800. Those are the next projections. Obviously, 5,700 is going to be the next one. 5,725 is going to be the next projection for Nasdaq continuing higher. But you can see on the daily chart, and I'm going to zoom in a little bit, you can see that for the last 5 trading sessions, so throughout this week, we have been keeping this range. 56.40, 56.87. Not a lot of movement if you think of it on a daily range. So not much to work with. over here. Unless we started the session very early at 5 a.m. Eastern time, and then we could have benefited from this range right here. So once again, the move happened. The majority of the move happened overnight. You could see the whippiness, the turnaround, the 180 turnaround in price right here. This was a good indication that the fact that we had this hourly sell, that the price might come in even more. So let's move on to the mini S&P 500. The mini S&P 500, same cluster of support, visit of the prior low, 2378. 2400 is going to be the line in the sand. If we break this 2400 level, we may continue higher. Obviously, targets into 2427 for next week. The monthly chart, we do have a new high, 2403.75. As you can see here, we've made this high on May 8th. So it is this month, and we're seeing more upside. However, take a look at the extension of this move. So it is very extended. Once again, majority of movement happened overnight. And it is very extended to the upside. Very, very hard trading environment. We are here into resistance. Anytime the price is hitting resistance, we can expect a pullback. The more the price is going to reside in this area, it can mean that it's trying to erase that resistance. It's trying to stabilize at that point before moving higher. Any clue of a sell below 70 or 74 in this particular area can lead to a potential sell all the way into the 2330. So this is what we're going to have in mind for next week. Let's take a look at oil. Oil is very interesting the way it is trading right now. Today, for the first time in a very long time, it came close to triggering a weekly sell. A daily sell. This is very interesting here. 47.30 may be a potential sell, maybe a potential swing for price. 48.20 is resistance at this point for the daily perspective. So this week we have bounced off the support level, consolidated, broke out of this pattern, but at the same time, take a look see what's on the left-hand side of the chart. Cluster of support that now translates into resistance. Is going to create a ceiling of resistance at $48. So the key here is to watch the daily chart in correlation with the hourly chart. Anything above $48 will be considered bullish. Keep in mind, you do have a resistance level right here. You see the 200 moving average, $49. It's also a whole number, so keep that in mind. We also have a prior high into the same location, 49 and change. So this is going to be a big reaction area for price. Let's take a look at gold, and we do have a swing in gold active. We did place our stops at break even. This is what I usually like to do, and especially as we're moving into the weekend, because the weekend is unexpected, and you can have all sorts of geopolitical events, you can have anything that's going on, and you could have a reaction in the market that happens as soon as Sunday. So with that in mind, we do have a swing. We placed our stop at break even. We're waiting patiently. So at this point, we have a risk-free trade, so we don't have anything to worry about. And gold has been stabilizing here, has been creating support, 12.14. We got a trigger yesterday, a daily buy at 12.25. We had a continuation higher today. Today we made a high of 12.31 and change. And we still look bullish all the way into the 1242 area. That is going to be our next target area. And that's where we have this void. So if the price is going to maintain these levels and not pull back dramatically, we're still going to be active in the trade. And also we may have that follow through because we have a cone of void into this particular area. We also have a lot of support that is coming in from the weekly chart, as you can see right here. We have the 89 period moving average, and we have the 200 moving average right here at over 30. And what that means is that if we break above this zone, we're going to ignite to the upside, and we might see targets of 1250 and 1260 as well. So we're going to keep a close eye on that trade, but at this point, guys, it's a risk-free trade. All right, so last but not least, let's take a look at bonds. And bonds have been basing bullishly right here. We had a trigger at 150.28. We have continuation into 151, and actually we did have a high of 151.22. Here is one of these areas that are that becomes very delicate in the sense that we're hitting a 200. This is area of resistance, and we're also hitting this resistance cluster right here. If we try to eat through this over 151.20, or even if we have a pullback to, and I'm looking at the hourly chart, to 151.12, 151.08, these are going to be buyable pullbacks. If we see the market pull in, trades and bonds, we're going to look for longs. Okay, so it's not sophisticated. And what we need to look, and in particular, the way I look at the market is I want to see a base or a range on a very small time frame, on a 2-minute chart or even on a 1-minute chart. I want to see a very small range that is happening before the New York Open for indices, because indices are the drivers. So I'm going to be looking for weakness in the indices, and I'm going to be looking for bullishness in bonds, and the other way around. So we do look very bullishly. You can see here on the daily chart, this is a big area of support here. If we manage to stay above this area, we may have a continuation higher. This is all for today. Thanks for joining. Hope you all have a safe and relaxing weekend, and I'll see you guys here back on Monday. Thanks for tuning in, and enjoy your day.